we will discuss global trends, US data, market indices, and the currency shifts. Hello, everyone. Welcome to Midweek with Indiacharts. This is Shilpa Raidas. And as always, we have Jay Vora with us. Hello and welcome, Jay.
Hi, how are you?
I'm doing very good, Jay. How have you been?
All good, thanks.
Wonderful. So, Jay, we are very excited about this midweek today. I would like to quickly move on to the first question for you. So, how have the data points from the US been in the past couple of weeks, Jay? And what do we really make of those points? Also, how are the US indices and other markets poised? And what about the dollar index, gold and silver, Jay?
So yes, we have got a lot of data points and some of them have been mixed because if we see the jobs data, over there, the job openings and the non-farm payroll, obviously has dropped significantly. And that is positive because, you don't want a very hot economy. And at the same time, if we see the average hourly earnings and the wage, inflation. So those all things have been cooling off, and that is a very good sign. In fact, even if we look at the unemployment rate, that has inched up higher and that has come up to 3.9 or something. So, these are all the positives. But yesterday we had the PPI data, which was indicating a slightly above the expectation reading. And that is still telling you that the inflation somewhere is still there and it is sticky. What I read about it was that it was more of a service-led inflation rather than anything else. So I think that's why market kind of moved on from that data and, even the Dow Jones and S&P rose higher. Today, we are having CPI data and actually that is very important. So we are actually recording the video just prior to that. So let us see how we get the CPI data. But the sense that I get, looking at everything is that, data is still not as conducive as the Fed would want. Okay, but it is slowly, inching towards that direction, especially on the job front as well. The wage inflation and all is cooling off a bit. Participation is increasing. So these are all good signs. But yes, there is still some inflation that is there. So that's where, that narrative has again kicked in, which is higher for longer. Okay, so maybe I don't think there will be a rate hike that is on the cards, though many people are expecting. But I think, rate cuts will also not happen. And that means that the prevailing rates will actually stand for longer. And that is how it is. I think the market will adjust to that. Because honestly, if you would have asked me a few months back, I would have expected that the market would correct. But I think the market has absorbed that thing. And in fact, even if we see the bond yields, those are also sort of cooling off a bit. At least they are not inching higher now. Okay, if the bond yield starts inching higher, then, that's where the market does get a bit nervous. But that is not inching higher. That is a good sign. And if we see the other indices, they are just, taking support of the averages and they are rising higher. So let me just quickly share my screen. And here, when you see S&P 500, this is what I was talking about. So there was this brief correction where it tested the 20-week average. And from there, now again, it has started to rise higher. And in fact, on the daily chart, if we see what had happened was, it was not completing its cycle over here. It was not coming back to zero line. Now with this correction, it came back to the zero line and again, it has started to inch higher. So these are good signs that despite of all these kind of news, okay, which was hot PPI data, Fed telling that we'll keep the rates higher for longer and so on. Despite of that, the market has moved on and, it is actually rising higher. So that tells you that market is probably not so worried about those factors. In fact, apart from that, one key thing that is happening, and that's why we sort of change our stance on the Nifty index, where, earlier we were sort of a bit more cautious on the markets. But now, the confidence is increasing on the upside. that eventually this sideways consolidation. So we'll come to that part. But broadly looking at the global markets, that's what the sense we are getting, because let me show you the emerging market charts and the developed markets. These are all actually rising higher. So this is the emerging market screen. So over here, you can see that, Hang Seng has seen a stellar performance in the past 1.5 months. If you see Brazil index also, it is sort of consolidating around its all-time high level. If you see, Australian market, that has broken out from the all-time high and it is sort of consolidating over there. If we see the Shanghai index as well, there has been a big move from the bottom. So yes, there was a lot of pessimism over here, as if things are going to end for China. But there has been a very strong comeback in the Chinese indices as well. And from this minor consolidation, it seems to be breaking out. In fact, you pick any other index, you pick Taiwan index, I think that is at the all-time high. So wait, let me zoom the chart. So yes, here you can see that the Taiwan index is actually at an all-time high. So that is rallying as well. It is only, I think, the Thailand index which is very dull. Otherwise, if you see Jakarta index also, it is just consolidating around its all-time high. And I think over here as well, you will eventually end up seeing good momentum on the upside once this range is broken on the upside. So this is how the emerging market is, which is basically looking good, right? Now, when we go to the developed markets, I think this is where the conviction, doubles up even more, because, given that what Europe was going through, we heard of recession and doom days for Europe and so on. But if you see the indices, they are just flying away. Okay. And this sort of clarity is, and this sort of move is giving us that clarity that probably the bigger correction which was anticipated. Okay, so I think all the upside levels are now broken, where now we can't be bearish anymore. Like, you put any alternates and all the bearish alternates are gone at this point, right? So that's the broader idea is that all the world markets are actually breaking out on the upside, and we are seeing momentum. And it is not just the world market, but even if you see something like copper, copper has seen a stellar move in this past 1 to 2 weeks. Okay, and it has almost it has almost tested its March 2022 high. So that's where, again, copper is also rising higher, and that is again a sign that probably the economy is doing well, and that is where we are seeing this up move. Even if you see gold, silver, basically all the commodities, if you see, they are bouncing back very nicely. So silver as well, it broke out from this range, tested its range, and now it is trying to inch higher. Mind you, if silver breaks out from this range, okay, which is 29-30 range, if this is broken on the upside, there can be a very, very big move that is possible. That is because, we will eventually end up with these kind of levels. And 50 is what is basically 50 or 52 is approximately the all-time high. So that is what levels that are going to open up. In fact, when we had spoken about gold in length, so over here as well, what has happened is that this entire range has been broken on the upside. Okay, so any minor consolidation or dip is now likely to get, is likely to attract, buying pressure, and eventually it should be headed higher. So if you pick up anything like gold, silver, copper, which I just showed you, it is only, I think, crude, which has been a bit dull, and that is okay. Crude being range bound is also positive for the economy, because it leads to less volatility in terms of commodity prices and so on. But yes, if we see the other things, these are all indicating a bullish outcome. Now, one thing that we want some confirmation is from the dollar index. So you can see that the weekly RMI, it turned bullish over here. After that, we had seen a pullback. So earlier, I was actually thinking that maybe this trend line will be tested around this point, like it was 108, 108.5 or something. But now, with the way the pattern is occurring, it seems like it could be a diamond pattern that could be forming. Okay. And possibly we can see a correction in the dollar index eventually. What we would want though is a break of this averages, which is say somewhere around 104.2 or so. Once that happens, once this averages break and we see a weekly RMI turning bearish, these will be the signs that probably the dollar index is done with its up move and now it can decline. And probably in the next leg of decline, it may go even below 100 or so. And that in turn will be actually very bullish for commodities, emerging markets. And like I told you, emerging markets are already leading on the upside and they're giving signs that furthermore upside is likely. So when we look at the broad picture, what we are seeing is that there are few data points that are a bit concerning. Okay. But I think the market is okay with it. It has, sort of digested those news and it is moving on. So if we see purely then in terms of price action, what we're seeing is bullish trend across various, asset classes, be it commodities or equities. And just the last bit, what we want is basically a decline in the dollar. Once that happens, that will, solve the entire puzzle. And that will further indicate that the view that we have that emerging markets will do well, commodities will do well, developed markets are already doing well. So these all trends will continue. And these all trends will sort of be a tailwind for the Indian indices as well, which so far has been, sort of underperforming. And that is also because after the state election, we had run very hard while the other indices were sort of consolidating and they were sideways. But I think in this entire backdrop, what is sort of getting more and more clear is that even if we have any correction on the Nifty index, though that is not a base case, but if at all we have any correction, it will be limited and eventually we may see a pickup that can happen. But yes, we will discuss it in much more detail when we come to the setup of the Nifty index.
Okay, that was very interesting, Jay. Thank you so much for that. So what we are seeing is that the Nifty index has seen a lot of, zigzagging in the past few weeks and also months. Are we done with these choppy moves, Jay? And do we see a trending move soon? If yes, which will it be? We would like to know, up or down, and what are the sentiment indicators on strike also telling us, Jay?
So yes, we had done a lot of flip-flopping in this period because, each time it was hitting the resistance line, which was basically this. If you draw a trend line over here, so each time when it was hitting the trend line, we were turning cautious because, there were risk involved at those point of time, because it was only after Fed meet where it sort of said that, we are now going to, we are not going to do quantitative tightening at the pace at which we were doing. And in fact, the Treasury Secretary came and she said that we are going to do buyback of bonds. So this again is telling us that the easy money environment is coming back, and easy money environment is usually positive for equities. And with that sort of puzzle solving, because all this while we were not knowing what direction the Fed and the US economy would want to take. Will they tighten the stance so much that something breaks and that eventually leads to inflation cooling off, or they would be okay to put more money and sort of inflate everything. That is like a reflation trade that is again back, because now what we are seeing is that higher interest rate and we are seeing higher commodity prices, we are seeing higher asset prices. So everything is getting sort of reflated. And this is what I think Rohit sir has also covered in its long short report, which I think was published a month, I mean, a week or two back. So there we have extensively mentioned all these points and why we sort of feel that worst could be over for the Nifty index, and technically we should be rising higher. So the entire point is this only, that I think we are reaching a point where this sideways sort of consolidation that we had seen, that should possibly get over, and we should be inching higher. One confirmation obviously to us would be that if we end up breaking the 61.8% of the recent decline, which is basically this, that is somewhere around 22,422, that will sort of further confirm, because while the Nifty index does manage to close above this, we'll end up seeing the RMI getting into bullish mode once again. So broadly, if the 61.8% retracement level is taken on the upside, and we have a bullish crossover on the daily RMI, we would think that the next leg of up move has started. And also this sideways consolidation, I mean, this choppy move will sort of then start looking like a sideways consolidation, after which I think we should be seeing the next leg of up move. So that is how the setup of the Nifty index is. And in fact, when you see the mid cap and the small cap index over here as well, what is happening is that the 20-week average is not breaking, and the index is continuing to rise higher. And that is why we are sort of seeing this incomplete cycle. So earlier, when this top occurred and it was looking like that this is 1, 2, 3, 4, 5. So what we thought was that maybe we get a correction, or which can be either till here, or maybe we get a deeper correction which will lead to the RMI completing its cycle, and only then we see the next leg of up move. But given that once again the 20-week average has been defended, okay, and at this point of time, many of the sentiment indicators also indicated that we are sort of reaching an extreme in the short term. So that's where we sort of changed our stance, and we thought of more bullish outcome also this time around, because many of the other piece of the puzzles were getting solved. That is, Fed not being very hawkish. Then the other part was pumping of liquidity by the US. Then commodities also starting to rally, dollar also weakening, emerging markets continuing its up move, even the developed market continuing its up move. So all these factors, once, I mean, that has started to come, I mean, all this is happening at the same time. So this is now giving us greater confidence that maybe this smaller degree correction is complete, and from here only we should be extending higher. Also, the similar is sort of the case with the small cap index as well. So once again over here, the 20-week has been held, and it is again starting to inch higher. If we see the daily chart, in all these cases, what we would want is a bullish crossover on RMI to further confirm the same. So once that happens and the 61.8% retracement of the decline gets taken out, so that will be a sign that next leg of up move is starting. In fact, when I see the sentiment data, I can actually see that people are still very bearish, and that is even more better, because once the confirmation happens on the upside, you will sort of see them switching the course very quickly. So for that, when we look at the sentiment data, and within that the FI's positioning, despite this rise that we have seen in the recent past, they are still shorting, and I mean, they are just shorting right now. Okay. And with the past data, we have seen that whenever they come towards this line, okay, which is the first orange line or the second orange line. So this is where it gets extreme, which means that the FIs have shorted a lot, and now a short covering can happen. But even in the past, we have seen that once their short position comes around this first orange line, that is also a good point from where the turnaround can happen. So this data, when we see, it gives us the confidence that the FIs are still very bearish. So I think once the 61.8% retracement gets broken out on the upside, which is 22,422, we should start seeing FIs also covering their short position. Also, when we look at the client's data, okay, over here, they have been aggressively going long. Okay, now their long positions are sort of reaching the second extreme. So what do we mean by this? I mean, what implications does it have is that you can see over here that when the clients were long to the second line, okay, which in numerical terms is 280,000 contracts. When that happens, okay, you typically see a good bottom. Okay, you can see over here what had happened. Okay, you can see over here what had happened. And again, we are reaching the point where a major bottom can occur. Okay. This, like I told you, I mean, when we plot the FII's index future data as well, both of them goes in opposite direction. I mean, one goes extreme long at the bottom, that is client, and FIIs usually go extreme short. So I think if we get the reading over here, and even if FII's ka reading come till this point, which is like they are net short by around minus 250 or so, that will be a very good indication that somewhere over here a bottom can occur. Now, one more data point which I was observing that is sort of making me feel that bottom could be near is that put call ratio, which is smoothened by the, I mean, this is the open interest put call ratio, which is smoothened by 9-day average. Over here as well, it is now coming towards this oversold zone. So over here as well, you can see that when this was in an oversold zone, we bounced. Over here as well, we bounced. Okay. Over here as well, we bounced. Here, we saw some positive divergence, which means that the index was falling, but this ratio was consistently rising higher, which was telling you that people are more comfortable shorting put. And that is why you were seeing the ratio rising over here. Now that it has come towards the oversold zone, what I would want to see is, this ratio turning around. Once that happens, that will also further confirm that maybe a short-term bottom could be in place, because we are sort of seeing a lot of pessimism right now. This ratio drops when there is a lot of call shorting that is happening rather than put shorting. Okay. So this is sort of telling you that the market is rising higher. Despite of that, call shorting is happening more, which means people are not sort of convinced and they are bearish right now. And typically when we see it coming to an extreme, you will see this ratio turning around. And when this ratio starts turning around, that means more and more participants are actually now interested to short puts. Okay. And also add to that, if we see the Indian IVs as well, that has shot up a lot. I mean, this can be due to election as well. It has shot up to 20. So over here as well, I think when the IVs start cooling off, that will tell you that, whatever fear that people are having, it could be due to election. There are many rumors that BJP will not make it, and they may not even form government, and all those sort of rumors are floating in the market, and that has sort of made the market a bit nervous. And that's why you're seeing all these sentiments. In fact, even when we look at the market breadth over here, so in this correction specifically, we also saw the breadth going from one extreme to other extreme. Okay, and now it is again starting to pick up. So there are many such indicators that are actually telling you that the recent decline that we have seen, there was a lot of pessimism over there. In fact, even when we see the diffusion indicator, and for Nifty, it did not reach this line, right? But when we look at something like small cap index, it reached this oversold line. In fact, if I'm not wrong, then even in not total market, but the mid cap, no. So it was only, I think, the small cap index which reached this extreme. Okay. And in fact, for a while, we also turned negative over here. Okay, this is also telling you that the breadth sort of has weakened a bit, and so far, I mean, while the market is rising higher, and over here, basically, this is small cap 100, what I'm showing. So here we are seeing that, this has come down. So already we were seeing a bit of a negative divergence because this index made a new high. But over here, you could see that less and less stocks were making 1 month new high. But I think when you look at it for Nifty, we came back lower, okay, and I think we should be recovering from now. So broadly, when we look at many other sentiment indicators, like I told you, I mean, FII, DII, clients, FII and clients position basically, and then we look at this something called as the OI PCR, which is basically 9-day average. So all these things are sort of telling you that market participants are still not convinced, and when we look at the chart setups and we see that the Nifty index is sort of holding the 20-week average. So this is telling us that sooner or later we should be seeing momentum picking up. And once we see that, we will see sort of broad-based rally also picking up. And in the near term, I'll just highlight it once again. What we would want to see is a close about 22,000 retracement. I think once that happens and we get a bullish crossover, these will be the signs that probably the next leg of up move could be starting. So let's see how things unfold in the days to come. But the setup on the sentiment is very good, and it is telling us that there is still a lot of bearishness. And hopefully, with the market rising higher, all those bearish sentiment should reverse, and we should be seeing a good up move in the days and the weeks to come.
Wonderful. That was very comprehensive, Jay. Thank you for the analysis. I would like to encourage our viewers that if you have any questions, please feel free to ask in the comments, and Jay himself is going to answer them. Okay, that's certainly going to help you. And please do subscribe to the channel while you're at. I will also leave a link down for Strike. If you want to subscribe to Strike, you get a 7-day free trial. So the link will be in the description. And also you can follow Strike's Twitter and YouTube channel. That was a wonderful session, Jay. Thank you very much for your time. And looking forward to see you next week. Take care. Thanks.